Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about VFV Vanguard S&P 500 Index ETFs. So this is one of the Vanguard family ETFs and we are going to look at it today. So a quick disclaimer, this is not financial advising, and if you would like to do these things, so you can go ahead and do your own research, do your own due diligence, and then come back and do what you think will work for you. So today we are going to look at this VFB and we'll do our analysis and see if we are going to add it into our passive income portfolio. But let's look at it. What is it all about? So about the fund is the price is 139 and 87 cents, and the MER is 0.09%. This is the management fees that they have to take out from your payment or something like that. So 12-month yield is 1.13%. So this one is a bit lower than some of the ETF that we have been looking at, but it's really, really very fine because this is a stable ETF that is good when it comes to growth too. So you can either use it for dividend or growth ETF as a growth ETF. So let's go down here. So this ETF, its objective is to track most of the big cap US stock, and they directly or indirectly invest in stocks of the US companies. So it's mostly exclusively US ETF. But you can buy in Canada by using our symbol because it's listed on the Toronto Stock Exchange. So here they are focusing on the efficient, cost-effective management. They are also involved in passive management. So you are not really, once you buy it, it's on your side for them to manage the ETF. It invests primarily in the US. So we already checked that. And then we go ahead and look at more of this ETF. So it was started in 2012, and the total asset under management is 20.61 billion. And the strategy is index asset class is equity. Some they are bond ETF, they have REIT ETF, some of which we will look at them later and see if they really qualify to go into our portfolios. But at this moment, we are focusing on equity ETFs. So investment manager that take care of this one is Vanguard Equity Index Group. Distribution per unit is 40 cents. Distribution frequency is quarterly. So that is all about it, about this fund on this front line. So let's see more about the performance. So these are the fees that they charge. And we go down here and look at the growth of 10,000. So if you had invested 10,000 since it started, so how will your growth go? How much dividend will you make? And all this stuff. So within a year, this is what has been going around. So sometimes it goes down and then up again. So the performance is actually exponential and trending upward. So more on this one, risk and volatility portfolio data, the characteristic of the ETF. So what is more important on this thing is like 505. So the number of stocks in this fund is 505, so which is a huge number. Most of the thing that we have been looking at is like 120, 200, but this one is a big one. Market capitalization, the graph. So if you look at the market capitalization, is we range from large cap company to small cap company. So the large cap company hold a higher percentage than the rest of the mix. So medium or large or medium small, small. So that is how they have distributed it, like market allocation. So this one, in terms of industries and the companies that they invest in, this ETF is well diversified. But in terms of the countries, like do they have companies from other countries that make up this fund? No, because most of the companies, or all of it, it comes from the United States of America. So there's no regional exposure or maybe worldwide exposure. It's just only United States. So if you don't want to put your money into companies that come from one country, maybe you will say, oh, this one is not for me. But if you believe in the diversity of the companies that make up that fund, and then you can go ahead and buy the ETF and see how it goes. Regional exposure is only North America, which is also narrowed down to US, only the US. Weighted exposure. The weighted exposure is how is the distribution across industries. So that's what they mean. So in this fund, we have the IT, the technology. Tech companies make the higher percentage of about 30%. Finance make the second highest, which is with 14 or 15%, and then healthcare 11%, consumer discretionary 10%, consumer communication services 9%, industrial, and then consumer staples 6%, energy 3%, utilities 2%, real estate is 2%, and then materials 2%, others is 0%. So that is how they spread out. So this is the industry exposures of those companies that make up these ETFs. So majority of them are tech companies, and maybe that's explain why there is less dividend from this company, because most tech companies do not pay dividend. So if we move downward and talk about top holding, we can already see what we have been talking about. So the first one is Apple with the highest 7%. Microsoft 5%, Nvidia 5%, Amazon 3%, Meta, and list goes on. And all of these, they come from the US. So all 10, top 10, and and every company that make up this ETF, they're all from US. So let's go down here, price and distribution, and let's see the history, like this, the price history. It has been like stable. There was a time that it went to 90. So that was during 2020 crash. So the price went down to 20. So if you had like bought it then, you would have been making more growth on this ETF than buying it now as for growth. But then they had a discount. So it went to 90, you will make a higher percentage there. So price analysis, that's how it's working. And then distribution frequency. So this is how they have been paying dividend for a very long time. And this table will show you like how consistent they have been paying dividend. So every quarter they pay dividends. So 2023, 2024, 2025. They just pay dividend in March 27th, 2025. So the next one will be in June. So maybe June 28th or something like that. So that's about it, about this ETF. So you can decide after doing your research or all those stuff and see if you really want to invest in it for dividend or you want to invest in it for capital gain. And this is the end of the video, and thank you for watching, and see you next time.